Experience the future of delivery with Mingling Thing drones. Watch sleek black and gold drones rise in coordinated elegance. 50 drones perform a breathtaking aerial ballet, spelling out Mingling Thing. Meet Francis Isugu, founder of Mingling Thing Drones. This is Mingling Thing Drones, the WhatsApp of physical delivery. CAR training in action and custom drone assembly. AI technology ensures prohibited items are detected efficiently. Join our 1.2 million pre-seed funding journey.
Hi, welcome to another training session with the Power40 trading community. So for today, we want to look at some very important aspect of our program, which is in our mathematical trading rules. There are constants, important things that repeat themselves over and over again that determine the outcome of the market and can also be summarized in a mathematical formula. So, what are these key things and how do they help us when taking trading decisions? In fact, I want to say categorically that if you had a blessed week already, just not knowing this can turn a blessed week into a cursed week. When I say cursed week, it means you will end up cursing yourself for taking the trade that day, or end up blaming yourself for taking the decision to trade on that day. You may end up accusing yourself for being so careless, and those situations could have been avoided if you knew what I want to show you in this very lesson. So pay close attention, because what you are about to learn is the core secret of our Power40 scientific trading method, because it is hanging on mathematical principles, mathematical rules of constants, identifying the variables that determine the behavior of price of the assets in every given day. Every given day. So you must observe this. When the conditions change, the interpretation of the patterns formed on the charts will also mean differently. So now remember, we have two core. Firstly, we are looking at sequences, right? So we have two core fib sequences. We have the buy sequence and we have the sell sequence. Whether buy or sell sequence, okay, there is something that is responsible for the sequence projection. That is what I want to show you. So where do we start from? First, how to identify buy sequence entry projection. First, also, there are always buy and sell sequences. Yes, if you look closely, you will see them. So I want to show you in this video how to spot them, right? But now I want to tell you what the interpretation of your observation would mean. Remember, in our scientific principles, we have three core aspects. We have the O, we have the I, and we have the E. So the O is for observation. All right? The I is for interpretation, and the E is for entry projection. So now, when we are starting with O, what is the observation looking for? What are you looking for? What do you want to observe? Okay, so you must know what you want to observe, right? You want to observe the starting point of your buy and sell sequence. That is the simple answer. So, firstly, what is your buy sequence based on? And what is your sell sequence based on? So that's what I want to show you. So now when we talk about observation also, we want to know the simple way to interpret everything we see, so that you can say this is what I observed. All right, so you must already have a category for explanation. Otherwise, observation will make no meaning. How this can be related literally is that if you see what you don't know, you do not know what you see. So you know what you see until you see what you know. This is a literal interpretation or expression of what I have just said. Okay, so how do you explain what you observe to make meaning to you, so you can report back and say this is what I observed? So we have simplified way of observing the key structure of market movement. All right, the key structure of price chain, a structure. Structures are either visible or let's call it internal. So we can either have external, that is visible, or internal, which some structures that are internal are not visible without the aid of special analytical tools. All right, like the x-ray can see your bones, right? Well, if someone looks at you, cannot see your bones, you can only see the flesh. So the bone, your skeleton, is your internal structure. Doesn't mean it is not there because you don't see it. All right, while the body frame is your external structure, so with the market we have internal and external structure. But there is something that defines every market structure, and that is what you need to be able to have, a codified way of explaining your observation. So in the Power40 Scientific Trading School, we already have codified every structure in the market that would be able to give us that understanding of our observation. Now, what we are observing, we simplify them as events. Everything we observe happening in the market. So, like we have the red and the green here. These are observable colors, right? Good. So the red and the greens here will be the first thing we want to observe. How many red, how many green, and what is their order of relationship. So we now have to call the red simply a code. All right, let's give the red a code, arrow. And in our Power40 Scientific Trading School, that is the code we use. So it is our universal code for red, arrow. All right, then G is for green. So as you can see green, you can see red. Instead of saying green or red, you say what? G or arrow. Now if you swipe through your screen, all you see repeated is what? G, arrow, G, arrow in different relationships. Is that not so? So firstly, you should have been able to have an explanation for your observation so it makes sense. Someone tells, what are you seeing? Because I see G, arrow, G, arrow, G, arrow. Okay, just read it in the frequency for which it appears, right? So how many G's, how many arrow? Now you can now say 2G, 1 arrow, 1G, 1. You can see that, right? Starting from left to right, you read exactly what you see on your screen. But how do we combine this now? So this is the physical. Remember I said there is internal and external. So in the physical, you are only seeing the G and the arrow, right? But in the internal, there is something that you cannot see unless you use specialized analytical tools. But in the scientific method of trading, we do not use all other tools, okay, that have been created for exactly technical analysis. No, we use the tools of correlation or structural relationship. So in order not to be ambiguous, in order to be exact in whatever I'm going to show you, I need to go straight to what we are talking about. Okay, so now that's for the introduction to this subject, all right, for our lesson. Now, when I say we have the structure internal, it is what explains how the market is expected to behave. Okay, that's the internal structure, how the market is expected to behave, while the external structure is how the market behaves. So the one you see, all right, but what about how to tweak that behavior? That has to do with the internal structure. You may not be able to affect the external structure because that is already something printed out. How the market behaves is reported, is something that is shown. And that is why, like the G and the arrow, you don't affect it, you cannot affect it, right? But can you tell what is expected, that there will be a G or that there will be an arrow? This is prediction, all right? So how can you predict accurately? That is the focus of a scientific trader. How can you tell that the next thing will be G or the next thing will be arrow? So you need to look at the internal structure, which explains how the market is expected to behave, while the external structure shows you how the market behaves. So you use what you see from the external to project what you would want to see in the internal. All right. So based on what you see in the external, you can tell what you could see in the external. All right. in the internal. So you use the external to tell the internal. Okay, so for example, when you come, stand upright, your hands and your feet, someone can tell that your bones are, extended in the hands, the joints, all right, because they can see your physical appearance. They can tell where your bones are, your skeleton are. Then coming to touch, to feel, they can also tell the connection, okay, the joints. Same thing with the market. So let us bring this to the core mathematical expressions, all right, and stop relating. Okay, so let's start from what we are saying here. Like I said, you could be having a blessed week, but because you do not know what you are about to learn now, your week will turn into a cursed week. A week when you curse yourself saying, why would I let myself do this? It happens over and over again, and something is responsible for that. When you fail in correctly interpreting the relationship between your internal and your external structure. As simple as that. So how do you avoid that error of interpretation? Like I told you, in our scientific method, we have three core for our activities. First is the observation. That's the first core. All right. Then we have the interpretation. Then we have the entry projection. So these three things combine. If you observe correctly, if you interpret correctly, you will also have a correct entry projection. So the entry projection is what gives you money when it is correct and what makes you to lose money when it is wrong. And the entry projection corresponds with what we call now the price sequence levels. Okay, price sequence levels, which are also based on mathematics and anchored in our scientific trading, all right? Or our scientific trading method anchors on it. So let us now pinpoint what we observe first, how we interpret it, and then how we now do our entry projection. If you can understand these three constants, or rather these three core of our scientific method, then we are as good as ready for facing the market every day, no matter what it shows us. So we have to know what we are observing first. Like I said, when you have the green, you are calling it G. When you have the red, you are calling it arrow. And you know what G means? G means what? Appreciation in price interest point. Okay? Appreciation in price interest point, or gain in interest. All right? Then we have red, indication of loss of interest. Now, what happens when there is a gain in interest? There was a sort of demand for the asset. Okay, when there is demand for an asset, the asset price will increase. When people demand for a commodity, the fact that there is higher demand will mean there has to be a balanced pricing to make sure that the supply available does not run out. Okay, by giving few persons too much. So that is why the price is increased. All right. So when you see green, it tells you that there was price increase. When you see red, it tells you that there was price decrease. So what does it balance in the market? It means that there were buyers, people who demanded for the product or for the asset. That is the green color. There were buyers, people who bought the asset. So the buying action is an expression of demand for the asset, while the selling action, those who give out their holding of the asset, is an expression of what? Supply. So you give to supply, all right? You buy in demand while you supply by giving, right? Or by selling. So people sell what they held, while people buy to hold. So the red color also indicates what? A sell pressure. So that there were a number of people selling, while the green color indicates a buy pressure. There were a number of people buying, right? So now the factor is not how many persons we are buying, because you cannot distinguish the number of persons and it's of no particular consequence, right? But what you want to see is what is the relationship between the buyers and the sellers. That is the core. Demand and supply must balance, because these are two forces that must meet at a point. So where do they meet, and what is the significance of that meeting point? The moment you can establish that meeting point and how they relate to each other, what is the balancing mechanics, okay, what balances the both sides, then you can have something to interpret. So we are going to focus on the core of why I said this lesson is very important. So I will not go into explaining everything that could be explained, because I have already done those explanations in different other videos, right? But I'm just trying to go back to the basics so that I can come right into what I'm talking about. So now that you know the green and the red, we have a model, all right, for identifying the point of what buy sequence. So where buy sequence is based, all right, same also where sell sequence is based. So we always call the starting point of buy sequence a fib zero, a buy fib zero, while we call the starting point of a sell sequence a sell fib zero. All right, so now we use a fib to represent how we want to, okay, structure a mathematical order for calculating the number of points captured in every movement, not randomly, but in an order that we can watch, predict, and replicate. Okay, so now let's start with the buy sequence. What do we start our buy sequence on? We want to see, like I told you, we have two things, right, in observation, which is the external structure of the market. We have the G and the arrow. You already know what G and arrow means at this point. So now you want to see 2G. Now when I say 2G, you now know that two green following each other. Okay, 2G at the end of the second G. So we have G is in a direction upward. Remember, increase in price. So the G will start from a lower price and end or close in a higher price, right? So the end of the second G, that is called the closing price. So we can code that as 2GCP. Okay, 2GCP. Do you understand that, right? So it means that the closing price of the second green candle, because all of these are candles, that is a general expression, right? But now we are not basing on the fact that they are candles. We already know that they are candles, but we are focusing on the observable features of the candles, right, and the relationship between them. So now we have 2G. So when we have 2G, the closing price of the second G, yes, so the closing price of the second G is what we are going to base our buy sequence on. That applies also to the sell sequence. All right, so that's what we call the sell fib zero. The starting point of that sell sequence is going to be also the closing price of what? The 2 arrow. Remember, 2 arrow, we are now using 2. That there was a string of G and a string of arrow. So we call a string, which is the occurrence of 2 candles of same color. That's what we call a string, the occurrence of 2 candles of same color, a string. So when you see 2G, the closing price of the second G, that is your buy fib zero. When you see 2 arrow, the closing price of your second arrow, that is your sell fib zero. If we have established that, now let us connect it closer. Is it everywhere you see 2G that becomes the core focus? And is it everywhere you see 2 arrow that becomes the core focus? How should the 2G and 2 arrow relate for that focus to be significant enough for you to do a projection of either a price continuous increase or price continuous decrease? Remember, a continuation of forming next G's, further G's, okay, or forming next arrows, further arrows. Remember, we said observation plus what? Interpretation equals to entry projection, which is E. O plus I equals to E. That's our mathematical formula for the Power40 scientific trading school. Okay, so if you don't have the correct O and you don't have the correct I, you cannot have what? The correct E. So you must have all ticked correct. So now, like I said, you now know one thing again, that when we have 2G, the closing price of the second G is what we call what? The buy fib 0, while the closing price of the second arrow is what we call what? The sell fib 0. But is that going to mean that everywhere you see 2G, you must have buy fib 0 that will be significant enough, and everywhere you see 2 arrow, you must have sell fib 0 that will be significant enough? Let us answer that question by demonstration. Alright, so let's observe where we saw 2G and 2 arrow, right? Okay, so here there is 2G here, is that not so? And there are 2 arrow here, is that not so? So is this the same thing as, let's look for another place we saw 2G and 2 arrow. Is it the same thing as here we saw 2G here? Okay, then where next did you see 2 arrow? We didn't see 2 arrow because we saw 3 here, right? So let's go on to find the next 2 arrow. So until here we found the next 2 arrow. Doesn't mean that the gap between the 2G and the 2 arrow will be this wide all the way from, let's look at where the 2G closing price is, 4085, all right, 0.24. Then the 2 arrow closing price is now at what? 4048. That's good 400 pips. Is that what it means? So let's answer that question, like I said, practically. Now we want a connection, we want closeness, we don't want separation between our 2G and our 2 arrow for us to pay particular attention to it, right? So we want to bring them together. Anywhere we see them occurring immediately after each other, it could mean that the 2G did not just stand as 2G. The 2G could have been 2G and another G following, all right, but not interfered with by any other color. So it can just be 2G, another 2G, or 1G that follows, okay, or more G's that follow. Then following immediately is 2 arrow, okay, with more 2 arrow that follows and more 2 arrow that follow, okay. But let there be that immediate after there is a 2G occurrence, there should be another 2 arrow occurrence. But there can be continuity in the G's before the arrow started, all right? Or it can be the other way, 2 arrow then 2G, all right? So which one are we focusing on? That's the one we have to look for. So for example, in this situation here, this was a fine example, all right? We had 2G and then we had 2 arrow following each other. So this is the finest example we have here, okay? So it means that we can call here our buy fib 0 and call here our sell fib 0 in this situation. But I'll explain why we pay particular attention to a certain kind of relationship. And let's look next again. Here we have what? 2G, then followed by what? Another G, then followed by another G, right? This, does it follow? It will follow because here we have 2 arrow. You can see that, right? Before the 2G and another G followed. Is that not so? So this one is also correct. How do you see that? So we have 2 arrow followed by what? 2G. While in the previous case, we had what? 2G followed by what? 2 arrow. What do we do with this relationship? Let's look further. Let's look further where that is met. Here we had again 2 arrow followed by what? 2G. Okay, and here we had 2G with the extra G. So we are counting plus extra followed by what? 2 arrow. As far as we saw 2 arrow and 2G, it corresponds. Okay, here we also have 2 arrow followed by what? 2G. Okay, the extra is part of what we are counting. So are they all the same? No. The answer is what? No. Which one is significant enough? That is what you want to find out, and that is what is very important for you to do correct interpretation. Because first, you can always observe the 2G, the 2 arrow, the 2G, the 2 arrow. Those are going to be immediately clear to you, right? And you can always see many of these happening, but this is just the physical, the external structure. What is the internal structure that helps you to now anticipate what comes next? I told you that the internal structure tells how that behavior should be, while the external structure says this is how the behavior is. So the external structure says this is the behavior, the internal structure says this is how it should behave. All right, so good. Now, how can we now tell how it should behave? Which means, what is the next external structure that should play out? If we can correctly find the relationship between the external structures, we can find the internal structure and use it to tell the next external structure. That is the principle. So the first observing the external structure is called the O. Then defining the correct relationship between the internal structure and the external structures rather is called what? The E. That is is called what? The I. That is the interpretation. The interpretation is what? The internal structure. Then we now have the E, which is how it should behave. All right. That E is the entry projection. Entry projection is telling us how it should behave. So whenever we mark our sequence is always carrying that full information of O plus R equals to E. Whenever we mark our sequence, and this is what we use to mark our sequence, you can see these pyramids here. These pyramids already tell us that we have found our O plus our I and our E. You can see that. So whenever we do this, it tells us that we have seen our buy sequence and our sell sequence together. So our buy sequence, we use a pyramid that points upward. Our sell sequence, we use a pyramid that points downward. All right. So we draw these pyramids according to where the sequences are observed, and when the relationship is correct and also significant enough to infer the next direction of price movement with it. Okay. So now remember, we say buy sequence and we say sell sequence, and we want only significant points, right? Now, our fifth sequence corresponds with what is called market phases and circles. In other words, we are not trading with our fifth sequence outside the norm of how market runs through its circles and its phases. That's when I say market, the asset, how it runs through its phases and its circles. So what are the phases we are talking about? In the phases, we are talking about the trend phase, okay, the retracement or the correction phase, okay, and then we have the consolidation phase. All right. In the retracement and the correction, we are talking about the expansion phase. All right. Then in the in the consolidation, we are talking about the next phase called accumulation. Okay. It also consolidates, and distribution. Those are part of the market phases, and they have their reasons for being called these. So the trend phase is a phase when the market makes a move towards its circle and does not deviate permanently until it completes the move towards its circle. That's the trend phase. So in such a move, there will be a repeated occurrence of more colors in a certain direction that will outmatch the opposite colors. Remember, there will be more G's if it's what? A trend to the upside, because in a G, price what? Appreciates, which is like an upward directional movement. While in our sequence, we always call it to the right side. So an appreciation is to the right side, a depreciation is to the left side. While for the general language of the trading market, there is what? An upward move or a downward move. So they call it uptrend or downtrend. So this is a trend phase. And we said that our fifth sequence is interpreted within the confinement of the market phases and cycles. So which means that when we talk about buy sequence, we want to look at buy sequence that correspond with what? An uptrend. When we talk about sell sequence, we want to talk about sell sequence that also correspond with what? Downtrend. However, we can have within these trends their corrections or their retracements. So how do we distinguish a trend phase in our application of the sequence from what? A correction phase or retracement phase or expansion phase? They all mean the same thing. Either correction, either retracement, either expansion, they mean the same thing. Okay, so that is a period in which the market returns back to test a level where it had originally been, okay, while in its trend journey. Okay, the price returns to test that level to gain new momentum or to gather new players in. Okay, it's just like discounting the price of an asset when the price is too high. That is what it means, so that more people can acquire it. All right, it's also like doing an auction, okay, to sell a product, a product of high value where there will be more attention. So that is what it looks like in the correction phase. Then we have the next phase, which is where we call the consolidation. But that is not the core. So the core now is the trend phase. I want to look at the trend phase, which switches into what the correction or the expansion, because inside of the expansion you are seeing correction and you are seeing retracement happen, right? When the market is going to retest a previous level from where it had made its move in a trend direction. Okay, so now for our fifth sequence to be very effective and for us not to call a wick that is already blessed cost, we need to look for buy sequence and trade buy sequence whenever we are in a trend either to the upside or we are in a correction to the upside. Take note of that, which is a phase, right? So either our phase is a buy trend or a buy correction. Do you understand that? That's an uptrend or an upward correction. That is when we look for what? The buy sequence. So it means that we are looking for the buy sequence when we want to trade an uptrend or a correction to the upside. So if we've understood that, let us now talk again. What is the difference in the structure of our external, appearance of candles that will make us to know that this is for a trend phase, and then we know that this is for a correction phase? How can we really do that? So the simple rule of thumb is, firstly, you want to see 2G or more G, that is followed by 2 arrow, or more arrow together. So let's use this very example where we drew this from, and see how it applied. So here when we had 2 arrow followed by 2G, it tells you that the arrow ended before the G started, all right? And then another thing is the closing price of the second arrow must be lower than the closing price of the second G. In this case, the G dominates because the G occurs afterwards the arrow. So this is for an uptrend. All right. Now, when an uptrend has been found and the market has started moving in the trend, when you see the opposite of this same structure form, you know that the end of that trend is near. All right. Then what we follow next will be what? The correction. So let's see when that happened. So here we had the 2G where the closing price of the 2 arrow where the closing price of the second arrow was lower than the closing price of the second G in a 2G structure. This painted a picture of an uptrend. So here we'll only be looking for buy entries, because once we have marked our buy fib, we now know that our entries will only correspond with a buy trend or an uptrend. Okay. Now another place this would have applied is if we are already on a downtrend and then this structure forms, this will mean that we are going to have what? A buy correction or a buy retracement, which means that price will return higher towards a level it has been before while it was selling. Okay, so we said this can apply that this is an uptrend or this is a correction of a downtrend. All right, so that is when this structure applies here, where you see the second red or second arrow, lower than what? The second G. So back to our lesson. Now we want to look at the buy sequence and the sell sequence. So the structure that we want to pay attention to for us to say this is buy sequence is, firstly, if we see 2 red, in this words we call it what? 2 arrow. 2 arrow that comes what? Before 2G. When we have 2 arrow before 2G, and of course we say the closing price of the second G must be higher than the closing price of what? The second arrow. That indicates a buy trend. If it's not a buy trend, as if it was a sell trend that was ongoing, it will indicate what? The correction of what? A buy trend. Of a sell trend, rather, the correction of a sell trend. Then sell trend that has gone 1000 pips, for example, can only have a circle in correction of 500 pips. Correction is never meant to return to the impulse start level of a trend. Okay, it's supposed to reject the impulse start level, so which means that it has to move average of 50% of the total trend move. Okay, then sometimes it will get to 68% or 72%. That's maximum move, unless the trend is to change. So here, let's leave that technical specification out of it and focus on the external observation of market structure that will give us relationship we use to base our buy and sell sequences on, taking note of what the market phase, and in this case we're talking about the trend phase versus the correction phase. So when you see 2 arrow followed by 2G, that is the indication of either a buy trend and correct for what? A buy sequence, where you'll be doing what? Projection of a buy. Remember that the correct interpretation will lead to what? Correct entry projection. So if you can look at this observation here, 2 arrow followed by 2G, where the 2G is higher than the closing price of the second G is higher than the closing price of the second arrow, it is a buy sequence, which means that the trend is meant to what? Be a buy trend. So now look at that. Does it immediately mean that the market will start buying? No. In the sequence, we have key levels, okay, where the market needs to engage with for it to start buying. So I will not be mentioning that part yet because I want to focus on this core aspect for now. But when you look at it in the long run, you see that the market will eventually buy. All right, and that buy will need to make a complete move of what? 1000 pips. That is based on our scientific method. All right, 1000 pips. So let's look at this market, how it eventually happened. So you see, the market first of all came back down. All right, and then from there it started the journey back up. So you can see that, right? So the market moved from down to up. Now we have another structure where the 2 green will come afterwards, or rather the 2G will come before the 2 arrow. That is a structure for a downtrend. Okay, 2G come before 2 arrow, where the 2 arrow is what? Lower than the closing price of the 2G. Let's look for where that happened. So here we had 2G, 2 arrow. Okay, we had what? 2G and what? 2 arrow. The closing price of the 2 arrow is what? Lower than the closing price of the 2G. So this is valid. Do you see that? This is valid for that structure of what? A return down. Now let's look at it again, and that occurred here. We had, let's look at it, 2G and the 2 arrow. Is this valid for a downtrend? No. Why? Because in the downtrend, the closing price of the 2 arrow must be lower than the closing price of the 2G. You see that, right? So you should have 2G and 2 arrow, where the closing price of the second G is lower than the closing price of the 2G. So this is an invalid structure for a downtrend. All right. So let's look at another one again. We have 2G and 2 arrow. What does this show you? This is a valid structure for a downtrend because the closing price of what? The 2G is higher than the closing price of the second arrow. And also, another correct relationship is that what? The 2 arrow comes after what? The 2G. Okay, so you can use this repeatedly. Find this first of all before we explain the next condition. So let's look at what happened here again. Here we had what? 2 arrow and what? 2G. The closing price of the 2 arrow is lower than the closing price of the 2G. Okay, so this structure here is what? A buy sequence projection. Why? Because the closing price of the 2 arrow is below the closing price of the second G, and also the second G comes after what? The 2 arrow. In other words, the 2G came after what? The 2 arrow. So the first condition is that there must be in a downtrend a lower price of what? The 2 arrow or the second arrow, okay, which must be lower than the closing price of the second G, and then the 2G must come before the 2 arrow. But in this case, what? The 2 arrow came before the 2G, which does not show what? A down sequence. Okay, and if you look at what happened there, this clearly revealed is based on this structure alone. So you have your second arrow here, and then you have your second what? G here. Are you seeing it? So this is what? A buy sequence. Now let's look again where that happened again. So here, this one is already valid. Now let's look at this one. This is what? 2 arrow and 2G. So once again, the closing price of the 2 arrow is lower than the closing price of the second G, and also the second G or the 2G came after what? The 2 arrow. In this case, this is also a buy sequence because the 2G occurred after what? The 2 arrow, and correctly still, the closing price of the second G is higher than the closing price of the second arrow. This is a correct buy sequence. All right, which means that in this case we are looking for what? A buy. Just like in this case, we are also looking for a buy. Now let's look further again and see where we see that relationship. So here we have what? 2 arrow. Okay, this is 2 arrow, and here we have 2G. In this case, what happened? The closing price of the 2 arrow and the closing price of the 2G are equal, which means this does not serve as a valid buy sequence or sell sequence. In other words, this would have been a buy sequence first of all because the 2G came before the 2 arrow. Came after the 2 arrow, but it is not valid because the closing price of the second G is not higher than the closing price of the second arrow. So this is an invalid buy sequence. So you will not draw a sequence projection based on this. Let's look for where next it occurs, so that you see that after that buy sequence, you see the price kept going up. So now we look for where there was an occurrence again. So here we have 2G followed by 2 arrow, right? And here the closing price of the 2G was what? Higher than the closing price of the 2 arrow. So this is a correct for sell sequence. Is that not so? Now let's look at it. Again, the 2G came before the 2 arrow. This is correct for what? A sell sequence. But what happened? The market did not sell yet, right? It did not sell. It continued going up. We are going to have what explains that. Now let's look at the next one again. We have 2 arrow followed by 2G. Again, this one, there is an equal price between the closing price of the 2 arrow and the closing price of the 2G. So this is not valid for either a buy or sell sequence. You can see that, right? So let's look for the next occurrence. We have 2G and the 2 arrow. Here we have the closing price of the 2G higher than the closing price of the 2 arrow. So this should be one of the valid cases of what? A sell sequence, right? A sell sequence projection, because first of all, the 2G came before the 2 arrow, and also the closing price of the second arrow is lower than the closing price of the second G. Let's look at the next relationship again. We have 2 arrow and 2G, right? Here the 2 arrow came before the 2G, so this is what? Buy sequence projection. Then we have again the lower price of the closing price of the second arrow and the higher price of the closing price of the second G. So this is valid for buy sequence. You can see that, right? So we continue like that until you understand your observation. If you look through, you will now see how it plays out. Now, what is the next thing when you have your correct observation? Okay, that is we are talking about, first of all, playing into the face of the market. But only face of the market is not enough. You also know what is called, or need to know what is called, the cycle of the market. That's to say, how long should a face last before it changes face? That's very critical. Okay, so our Fib sequence, price sequence projections must correspond with both market phase and also what? Market cycle. All right, so now every phase has a cycle. For example, every trend phase has what? A trend cycle, which means if the trend cycle is not complete, that trend phase is not over yet. So you cannot start looking for correction when a trend phase is still active. The same thing too, a correction phase has a cycle. A correction cycle must complete before what? A reversal back into trend will begin. So you cannot start looking for a trend reversal entry when what? A correction or retracement cycle is still active. How do you know them? So firstly, let us talk about our buy trend coming to an end, then what? A sell correction coming in, or a sell trend coming to an end, and then a buy trend comes in, or a buy correction comes in. So either ways, right? So let's look at what is most dominant here. So right here, we have what? A starting move, all right, indicating what? A buy. Because let's say we have just started from here, the day had just begun, right? As the day began, this was an incorrect order because we had, first of all, 2 green, where the second G's closing price is what? Lower than the second arrow closing price. So this was an invalid structure for what? A downtrend, even though the market came down, right? Now let's look at the next time we have that relationship occur. It was here. So which means that let's start with this observation here. We have what? 2 arrow, all right, where the closing price of the second arrow comes before the closing price of the second G, and the both of them occur next after each other. So this is a valid point of observation. All right. So if we use this for observation, it means that we are now doing a buy trend projection. All right. We're now doing what? A buy trend projection. So once we have a buy trend projection, we have what is called the circle of that trend. Now look at how the circle goes. The highest price of this fib 0 of our buy, this is buy fib 0, that is the sequence. Okay. The highest price will be 100 pips of fib 0. All right. 100 pips of fib 0. That's the first cycle. 100 pips of what? Fib 0. So for a day, you want to see the minimum confirmation of that cycle that price gets to 100 pips of fib 0. Okay, in the buy direction when it is a buy projection or buy trend. All right. So let's look at that. So far, price stayed below until price came close to it, and this is the 100 pips level. Price finally broke it. So at the breaking of this level, you now have the next projection. The next projection is just like this is 100 pips of fib 0. You need 10 times of this what? Fib arrow. Okay, so we call fib 0 buy fib 0, and we call here buy fib arrow. Okay, so you need what? 10 times of what? Fib arrow, which means this is 100 times 10, because the fib projection is what? 100 times of what? Fib 0. Do you understand? And now, since the circle of the buy trend will be what? 100 will be 10 times of fib arrow, it will be what? 100 times 10. That is why this is mathematical. So now you don't need to know anything else but just to know this fixed order for a trend cycle. Once you know that, you are able to do your projection. So from our 4058, we now know that 100 times of fib 0 will be what? 10 times of what? Fib 0 to fib arrow. So it means that we'll have from 4058 to what? 4158. So once we have 4158, that is where we're expecting the price to get to before the trend phase will be over. Then we'll start looking for what? A correction phase. So let's look at if that happened. 4058, let's see if we got close there. All right, so we got close there. Let's see. This is 4055. You can see that, right? So now the market got all the way to 4055. Did not reach 4058, right? So which means that we have between fib 0 was what? 4048 to 4058. So in between 4048 to 4058 is what? We have 4053. That's the in between of 4048 to 4058. That's the average price. We call the average price the what? 10 times 5 arrow in a buy sequence, or 10 times 5 L in a sell sequence. So that is where we want to see price at least get to, the 10 times 5 arrow, which is the average price. The price get to 4153. You can see it here. It did not break 4153, and that is what? The correct extension of the buy trend. So the moment that has happened, we know that the trend phase is over. We start looking for a fib structure that happened after the trend phase was completed in each cycle. So now we can say boldly that the trend phase completed each cycle. The next cycle that should form will be what? A sell what? Correction. Because a buy trend corrects by selling, while a sell trend corrects by buying. Okay, so now what we are looking for is a structure that corresponds with what? A sell fib. Okay, sell fib 0. So let's look for the structure. So from here we had And for us to get that structure, what are we looking at? We want to see two green that comes before what? Two arrow, where the second price, the closing price of the second arrow must be lower than the closing price of what? The second G. In this very case here, we had the closing price of the second G, and here we had the closing price of the second arrow. This is not balanced because what? This happened to come correctly in the order of G before arrow for us to look for a sell. Okay. However, the closing price of the second arrow did not come below the closing price of the second G, which means that this is not a valid structure to base our correction on. So let's see where we now had that play out. So here we had 2G followed by 2 arrow. You see that now? And here also we have the correct order where the closing price of the second arrow is lower than the closing price of the second G. So this is where we base our next projection. For what? The correction. All right. And the correction, if we have found the sequence for the correction, we're now going to do a projection for correction, which must be valid at 50% of the total trend move. Remember that the trend move here got to 5-3. Is that not so? So because the trend move got to 5-3, it means that from 4053 to 4153, the middle point of that will be what? 4103. That's the middle point. 4103. So if we are looking for correction start, we must expect to sell until price gets down to 4103. So let's look at it. What happened? So let's see if the correction has actually started and if the correction has gone to its circle limit before we start looking for what? A trend reversal. That is buy to what? A buy. Okay, so until then we are going to be selling. If you look at what happened now, after the completion at 5-3, the market started selling. So if you knew that structure, you started selling from here, or you wait until you find that structure of what? 2G and 2 arrow, where the closing price of the second arrow is lower than the closing price of the second G. What do you see here? The price now is expected to come all the way down to where? 5103. So how has it gone so far? Let's see, so far it has come down all the way to 41 rather. Remember, 4109. So it's not complete yet. Okay, so it tried again, went back up to retest and rejected the upside, coming back down again, okay, to 4110, okay, or 11. Still has not got down to complete the correction cycle. So the correction cycle needs to complete before you start buying. Are you seeing that? And once it reaches that price, we'll now start looking for a formation of what? A buy sequence, where the buy sequence means that we must see 2 arrow before what? A 2G, where the closing price of the second G is higher than what? The closing price of what? The second arrow. And that has yet to happen, because it is expected to happen only when we have seen price where at what? Touching at least 50% of the total trend move, which we have already measured. So if you notice here, we are using mathematical constants to do our calculation. All right. And until we find a valid structure, we cannot say that what we are looking for, end of correction, has come, or reversal entry has come. That is trend reversal. So we are looking at the cycle of correction versus the cycle of trend. The cycle of correction is 50% of the total move of the cycle of trend. And the cycle of trend is what? 10 times of the distance between fib arrow or fib 0 to fib arrow for a buy sequence, or fib 0 to fib L for a sell sequence, where buy sequence is projected towards what? Buy trend or uptrend or upward correction, and sell sequence is projected towards what? A downtrend, okay, or a downward correction. Have we understood this point at this? Or this to this point? If we've understood this lesson to this point, then we have understood the core of trading for profit making, where we can have a blessed week continuously. But if we ignore this relationship, we are going to be seeing that where we have a blessed week, we now turn a blessed week into a cursed week, because we did not pay attention to the details. So I remain Francis Bestman Isugu, the founder of Power40 Scientific Trading School. and Power40 trading community. If you have taken this lesson with me, I believe you have learned something that 99.9% of people out there have no knowledge about, no knowledge of whatsoever. And this is an edge, an advantage you have to be more accurate and with precision when taking your trading decisions. So, but I remain available as your coach to hold your hand for a period of 5 months while you are about mastering this scientific method of trading and also understanding the mathematical principles or rules that the entries are based upon. Now, in series of trials, you're going to also be learning. So as you are on coaching program with me, you will equally be learning. Learning is part of the coaching method or coaching strategy I employ, so that I do not just show you, I also on your own. As you keep learning, you now understand better what the scientific method of trading actually is. And then this is a fun activity. Like when you are applying the scientific method of trading, you realize that you have zero emotions, especially during the coaching program, because you do not have to worry about the volatility of price of the asset you are trading. And then being that we focus on gold, gold is an asset that has all the juices you want to sap from the market, something that can allow you to make good returns on capital, okay, within a short space of time. And now we have one of the longest range entry projections in the market all over the world. I mean, Power40 trading community, we trade with the longest range in our swing trade setup while trading gold as our asset of a specialty. All right, so we are all specialists like every scientist, and we take our trading seriously, following the scientific method of testing and then theorizing and then retesting, as the case may be. So I want you to experience this yourself. If you are already with me on my coaching program, you can continue so that you enjoy this experience and also have a story to tell others. I wait for your testimony as we go on trading together. Thank you. See you in our next lesson. Bye-bye.
Welcome to the MVP Showcase, your path to becoming a skilled drone pilot. Experience cutting-edge technology with Pico 4 Enterprise AR headsets. Immerse yourself in our hyper-realistic VR simulator above Tallinn. Train outdoors in real conditions with expert guidance. Instructor Francis Isagu provides guidance via tablet. Our program ensures EASA compliance with a 94% pass rate. Complete your training and receive a digital certificate on your phone.